Hey, I've got some news for the Orange County market. It's a catch-22 for you guys buyers. We're gonna talk about it, so let's stay tuned. I'm Dean Odell with Seven Gables Real Estate in the Odell Group. Today is October 3rd, and we're gonna talk about what's going on in the market, and we're gonna go to the charts right now. So starting with our first chart, Orange County active listing inventory. Take a look at the purple line. It's flattened out just like it has in a lot of other years. It's usually flattening out or going down at this time of year. We can see where we are right now today with 3,666 homes on the market. 2 weeks ago, we were just a bit higher. So you can see where we were last year at 2,340 homes. That's quite a bit less, right? So we do have more homes to sell, and that is good news. The 3-year average was 6,400 homes prior to COVID, so we still have a long way to go to get to average. Let's take a look at demand and see what's going on there. So over the last 30 days, we have 1,554 homes in escrow. That's as of today. You can see where we were 2 weeks ago, which was a little bit less at 1,413, which was on par for where we were last year. So we're actually ahead of last year's pace now. And the 3-year average was 2,262. But let's remember that that was also based on lower prices, more inventory, lower interest rates, right? So the bottom line is we've had a spike in demand. Look at that purple line. What do you think caused it? Well, we talked about it a little bit in our Tustin Talks, and I think we even said it's going to be real interesting to see what happens in the next report. So here we are. Let's talk about why do we have this spike in demand. So now let's look at the end of September comparison. This is kind of interesting news for you guys. If you look at 2022, where we were, interest rates were 6.69%. 2023, they were 7.61. 2024, they're 6.21. Look at that. We have had interest rates drop almost 1.5% in the last year. And look where we are compared to 2 years ago in 2022. So we can really say that these are the lowest interest rates we have had in 2 years, which is amazing because everybody's been waiting for rates to come down. And they came down a little further, but bumped back up about 0.5%. So we're going to have to see what happens in the future. But if you look at what that means for a $1 million buyer with 20% down, so that would be an $800,000 loan amount, you can see that last year the payment would have been about $750 more in 2023 than it is right now. So that's good news for buyers, get a little bit of payment relief. Of course, the only issue you got there is you can't buy what you could buy in 2023 for the same price. So even though you have a lower payment, you probably have a little bit smaller house too, right? So let's move on to demand. You can see we already went over those numbers in the prior chart. Looking at the 2-week change in demand, you could see there's that bump of 141 pending sales, up 10%. And you can see, giving you a sneak peek of expected marketing time, what that did, took the marketing time down 6 days. So let's look at the next chart, which is marketing time. So today we're at 71 days. You can see where we were 2 weeks ago at 78, last year at 50 days, and the 3-year average prior to COVID was 86 days. We're following the purple line, and you can also see in that purple line, there was that drop in expected marketing time, all due to the spike in demand, and that drops the marketing time. Let's see how that looks by price range on the next chart. Okay, so we can see with that drop in marketing time, it actually shifted things around a little bit on this chart. Last week, everything was 2 brackets, right? Each bracket was for 2 price ranges. This week, we can see a hot seller's market is all the way up to 1.25 million, where it was 1 million last time. So that's gotten quicker. Slight seller's market, you can see between $1.25 and $2 million. The balance market last week actually included the 1.5 to 2 million. Now that 1.5 to 2 million has moved up to the slight sellers market, and the balance market only has one price range left in it, which is 2 to 4. And then you go to the deep buyers market, which is anything over 4 million. And you can see how that's derived by looking at that legend above on the top left of this chart. And that's how we come up with what kind of market it is. You can compare the percent of current inventory with the percent of demand for each price range. So you may want to freeze this chart, take a look at it a little further, compare the days this year versus last year, and spend a little time with it for your price range. So now it is time for me to tell you what's been going on in the market, give you a little bit of advice. Okay, so here's my advice. It is the beginning of October, buyers. Now, what normally happens in the fourth quarter is we generally see less competition, but with this fall in interest rates, we've had a spike in demand, so a little bit more competition, but it will continue to fall off as we finish the year. It would take interest rates to keep dipping and dipping and dipping to really keep the demand as strong as it is right now. We know inventory is dropping as well, so as a buyer, just keep your eyes open on that market. I know the last couple of weeks it was a little bit more competitive with the drop in rates. We're out there writing offers as well, and we competed for some of those as well. We got some, didn't get others, but we know and we understand where you are. So it's always just buy for the long term, make sure you're moving into a house you like, and put a roof over your family's head, right? Or yourself, anyway. Now, sellers. Good news for you, market picked up, okay? So now you gotta really look at yourself, especially if you're on the market right now, okay? This is where you wanna be strategic, okay? You probably wanna get your house in escrow prior to Thanksgiving, right? Because we know Thanksgiving and Christmas, things are gonna slow down. Not impossible to sell your house during that time frame. We sell them during that time frame all the time, okay? But the reality is it's better earlier, okay? So the goal for you guys should be, let's get this house in escrow prior to Thanksgiving, and let's get it closed prior to the end of the year, right? Prior to Christmas and New Year's and all that stuff, because after that, the market's gonna be real quiet until, we like to say after Super Bowl Sunday, but let's just say early February, and then we'll start heading into a spring market again, right? Not impossible to sell your house during that time, but why not make it as desirable as possible? Let's play the probability here. We got more people in the market right now. Let's get that house priced right, get it reduced, got to do whatever you got to do to get it sold. Certainly don't want to give it away, but let's be smart, okay? Anyway, so that's it. And sellers, if you need to get a house ready or you want to talk about next spring or after the first of the year, it's a good time to start planning this stuff. We can lay out a timeline and start talking and working on this slowly. We can even show the house off the market if you want over the holidays, There's different strategies we do in the fourth quarter. We'd love to talk to you about it. Give us a call, reach out. Don't forget, we'll get that house all ready for you. You don't have to do a thing. Don't have to do a thing. What you need to do now is make a comment, subscribe, and you will get this showing up in your mailbox every 2 weeks automatically. Thanks for tuning in. See you next time.